Welcome to Money Talk, Mainsail financial podcast series where we host industry experts and local professionals to share some tips, tricks, guidance into areas that we don't necessarily get to focus on day to day. Today I want to thank Ryan Hemmert for joining us today. We are going to talk a little bit about business, acquisition, mergers, sales, all things related to a business transition. So thanks for joining us, Ryan. And
yeah, sure.
Maybe to get us started, can you share a little bit about where we're at today?
Yeah, sure. We are in Magnolia, which is my neighborhood here in Seattle. We're at the Serendipity Café and Lounge, which is a popular breakfast and brunch spot. And then it also has a wine bar, an adjacent wine bar, and evening spot that locals like to hang out.
Yeah, it's a great spot too. I haven't been back this way for a while, so it's good to check it out. But Ryan Hemmert is basically a business broker with Washington Business Brokers. And they specialize typically in revenues 2 to 20 million.
Correct,
in terms of businesses.
Yeah.
But partner with business owners to kind of gear up strategically, kind of plan for that transition and what that next phase of life looks like. So excited to pick your brain a little bit today and talk about all things business sale topic.
Absolutely. Okay.
So maybe to start, can you share a little bit more, expand a little bit more on what it is that you do and some of the areas that you focus?
Yep. So you said the $2 to $20 million in revenue. We're industry agnostic, so the businesses can be any different number of industries and things like that. And then it's really working with owners from, hey, I'm tired, I want to retire, I have a family health issue, and I'm ready to get out of the business, but I don't know how, or I don't know where to start, or I don't know what it's worth.
Sure.
And so we help partner with an owner through that process, assess a value for it, work with commercial lending experts to understand what the cash flows will support from a lending perspective for buyers, and then take the business confidentially to market and find an ideal buyer, and then importantly get it through to completion, through to a successful close.
Awesome. And I'm excited to kind of break down like the pre-sale, the sale, and the after-sale kind of as the framework of our conversation.
Yeah.
But maybe before we get into that, just more broadly speaking, like here we are, May 2023. We're 18 months into a very difficult market in the public markets.
Yep.
So on the private side of things, I'm just kind of curious your take on things and what you're seeing from your perspective.
Question is well timed because I just got a quarterly report this afternoon from the International Business Broker Association. Deal activity in the first quarter for small to medium-sized transactions was down about 14%. Okay, which maps, it was a similar decline in Q4 too. And really I'd say that the American economy is so large at this point that there's microeconomies happening, right? And what you see at the public markets, I always tell business owners, we're not transacting Amazon or Twitter, right? And so with larger M&A deals that you would read about in the Wall Street Journal or on the cover of the Seattle Times, that deal activity has fallen substantially, right? Goldman Sachs just announced a third round of layoffs here today, I'm sure you saw, right? And so when you look at their M&A activity, it's typically down for larger deals 50 to 70%, depending on the industry. For SMB transactions, depending upon the industry, I'd say 10 to 25%. Activity-wise is what it's down. And then in terms of the valuation hit, it depends on what industry we're specifically talking about.
Okay, so maybe that's a perfect segue into the next kind of line of things here. So obviously that's to your point, like there's all kinds of ways to slice and dice this. And so that's the kind of like the full scope on small businesses. But what about industry specific? Are there certain industries that are like holding strong, certain that are getting hit harder? What does that kind of look like?
Yeah, so today I have my second water damage and restoration business, that I just signed up. And so something like that, it's an evergreen business. Water's going to continue to get into all of our homes, unfortunately. And we all have insurance for that situation, right? And so something like that, its cash flows are durable. That business's cash flows look better in 2023 than it did in 2022. So that's a very attractive business and industry to buyers. So on that one, from a valuation hit, there's been essentially zero hit, right? If anything, those types of businesses are more attractive to our buyers, right, during this, right? Because people value a sure thing, right? And certainty from a cash flow perspective, right? So those sorts of things that hold up well and are typically recession resistant. I've got a tree service right now, same sort of thing. If you have a tree that crashes into your house, you need to get a deal with, or you need to get it dealt with, right? And it's really the fact that you might be concerned about your job at Facebook or whatever it is less of an issue, right? It's just something that needs to get done. Similarly, if it's a power line issue or something like that. So that tree services cash flows have held up as well, too. Other types of businesses, marketing and design. Today I talked to the owner of a creative agency, 12 employees. They do work for DocuSign, Microsoft. some of their large corporate accounts around town are pausing, right? Are pausing new engagements and things like that. And so they would sign a $300,000 engagement with a large, Fortune 100 company in the Seattle area. That company has taken a pretty big revenue hit, right? And those relationships aren't going away, but it's not the right time to take that business to market.
Sure. Okay.
Yeah.
Go ahead. Sorry. Did you have something to finish up? How do interest rates play into this on your side? From what you're seeing on your side of things.
Yeah, they are a factor, and I would say in general though that business sales are less sensitive to interest rates than residential real estate or commercial real estate, because really what you're financing or what a lender is financing and underwriting is a stream of cash flows, right? And so, and first off, I'd say that not all buyers, many buyers, are not looking to take out a commercial loan, right? So there are competitors, there are private equity buyers and things like that already have raised capital or funded searches. And so for those folks, the interest rate isn't as big of a concern. It's a warning flag to me as a broker, an M&A advisor, when a buyer says, I would buy this business if the rate of my loan was 1 point lower. Yeah. Because if you're going to buy, if you buying a $10 million business comes down to a 7.25% rate on an SBA loan versus an 8.5% rate on a loan, you're probably not the right buyer for the tree business, right? Yeah. To begin with, or the restoration business, because any business owner in America, they're susceptible to some risk, right? And a smart, savvy business owner recognizes that rates have likely crested, and in less than 2 years, they can refi that loan, right, at a lower rate, and immediately, have lower financing costs.
Yeah, that makes sense. I imagine that kind of pairs well with what you shared too about some of these more, if it's okay, to say it, the boring businesses doing well because their cost of production, whatever it is generally not interest rate sensitive, right?
Yep.
Okay.
Yeah.
That makes sense.
Yeah. And another example, tomorrow morning, my first Zoom is with the owner of a memorial and headstone business.
Okay.
And so something like that, multi-generation owned, people still need headstones, right? And that business has been around a long, long time. Those sorts of heavy asset businesses typically cash flow out very, very well.
Okay.
So,
And how about on the size? So, 2 to 20 million in revenues, pretty big gap.
Yeah.
Are you noticing anything different for the larger size of that versus the smaller?
Yeah, sure. So for the larger transactions, the financing cost does become more of an issue, right? And that's partly why I say it's not as much of an issue when we're talking about a $5 million transaction. That's a little bit different calculus if we're talking about a 20 or a 100 or a $500 million transaction, of course. So absolutely it does, right? But I'd still say with any owner, there are steps you can take now, irrespective of interest rates, how your business is doing, right? No cost steps every owner can take right now to position themselves better for when the market turns.
Okay, yeah, that makes sense. So I'm going to switch gears here a little bit and kind of dig into this framework of pre-sale, sale, after sale.
Yeah.
As kind of a switch of gears towards that, what are some of the biggest challenges that you find that sellers run into as they're either gearing up or in the midst of a transaction?
Clean financials and being able to answer basic questions on their financial statements, assuming they have financial statements. So you would be amazed how many $5 or $10 million revenue businesses have trouble or get nervous when I ask about a P&L, or ask about a line item on a 2019 P&L. So if you're that owner, that's a great first place to start.
Sure.
So that'd be the first thing I'd say. Second thing I would say is role of the owner. If every decision in your business or in your firm runs through you as an owner, that's going to be a challenge and an issue when it comes time to sell the business. So that'd be second. Third would be just thinking about your online presence, reviews and things like that, because anytime, after I confidentially take a business to market, like the Mainsail Financial Group, for example, and someone signs an NDA, we vet their identity and things like that, the first thing after they learn the identity of the business, what are they going to do? Google it after they review the marketing materials. And if they don't see much of a presence online, I try to spin that as a growth lever if the presence is lacking, right? However, if it does have a bit of a web presence, it always is impressive and reinforces a positive reputation with our buyer pool.
Okay, and obviously the earlier you start on this, the better. But is there a time period where a seller, if you just create a web presence and you start thinking about who's going to make these decisions 2 months prior to your sale is going to ignore? What would you say is a good time frame to really start seriously thinking about these things?
Really, when you think you're about 2 years out, that's when you really want to start to get buttoned up on some of those things, like from a financing or from a financials and documentation standpoint. And then as you get shorter in that window, it becomes even more important. One of the things, one of the things that surprises me, right, is that owners frequently wait to reach out to someone like me until their business is starting to decline, right? And that's probably one of the biggest mistakes that I see. And so what I mean there is you want to approach the sale process from a position of strength. The biggest thing you can do to maximize value in a sale is to have increasing cash flow and stable, like steady or positive sales. And if those two trends are positive, then you're going to really enjoy the sale process a whole heck of a lot more than if the sales or cash flow are down. Because if it is, it just invites 1,000 questions from our buyers, right? And we're going to go through your 250 line P&L by line item, right? And they're going to ask about, why is marketing cost 4.3% this year? Last year it was 4.1%. What's going on, Brandon? Right? And those are the questions, and it just becomes like an audit, and that's not fun for anyone.
Because they're buying that future cash flow, right? So if they see an opportunity for growth,
if they see it go down, then it just invites questions, right? When it's increasing, there's a lot less questions in general.
That makes sense.
Yeah.
So what else? So those are the three biggest challenges, I guess, that you see. What else are some things to consider as business owners who are preparing for that transaction?
Oh gosh, incentivizing employees, right? I think a lot of times you of course want to keep the sale confidential from employees, and I can talk more about why, but incentivizing employees help grow the business with you, right? And a lot of times I see owners that hold onto the reins so tightly, and their employees frequently have great ideas that they're very eager to share with a buyer after the sale is announced and things like that. And so a lot of times I'll ask your owner, when's the last time you incentivize your employees to help grow revenue together, right? And if you create an incentive plan for those employees that grows revenue, then you benefit as an owner. So that's an initial thing that I see that's valuable, right? In a lot of cases, spending money on marketing, a lot of small businesses don't, and really haven't had to spend a lot of money on marketing. But it's amazing, the return you can get on investment from just a little bit of incremental marketing spend for most small businesses in the U.S. I'm trying to think of other things. I talked about the online presence and reviews. Incentivizing repeat business would be another thing. And all of these things, if you notice, they don't really cost any money, that I'm mentioning. And so I think there's this mistake that owners make that to grow their business, they have to spend money. And I try to dispel that.
It's just thinking through what that's going to look like and how the seller's going to perceive it, the buyer's going to perceive it.
Exactly.
Okay. So second phase of this is obviously the actual transaction itself. So what are some thoughts as far as, somebody who is getting close? They're there. What do they need to be considering? What are some things to think about when it comes time to negotiations, all that kind of stuff?
Ideal deal structure and ideal buyer, right? I had a sale last year and the owners turned down over 6 figures less because they explicitly didn't want to sell to a private equity firm, right? And so who is your ideal buyer, and what are your ideal financial your payout at close? Do you want 100% cash at close? If I can negotiate a slightly higher sales price and you have a 15% seller financing or note, are you on board with that? Are you not, right? Do you prefer an all-cash buyer versus a buyer that needs to obtain financing, right? So some of those considerations, and then thinking about how long you want to be involved in the business post-transaction. I think frequently owners think, okay, you're going to sell the business in 4 months or 6 months, and then I can walk away.
Sure.
Wrong. Right? Typically it's standard, depending on the size of the business, at least for 30 to 60 days of working in the business post-transaction, and that's for free, right? That's included in the sale, 30 to 60 days. And then there could be a post-employment or post-transaction consulting agreement or advisory agreement beyond that 30 to 60 day window.
How is that usually set up? Is that, contract position, it sounds like some sort of consulting type of...
Think of that as a supplemental schedule to the purchase and sale agreement. So it's almost a separate contract. Typically in a business sale, there's multiple agreements that are executed on the closing day. And that could be for an hourly rate. It could be Brandon agrees to be available in an advisory capacity, at an agreed upon time at a rate of $500 an hour up to 10 hours a month.
Okay.
So that would be one way that those agreements are typically structured. I would advise on an hourly rate and things like that. And it all just comes down to a lot of sellers are happy with that kind of language, right? Because they love sharing ideas and talking about the business.
Yeah.
So, yeah.
And earlier you had mentioned that with with the interest rates rising, the market being what it is, it's not necessarily, well, in some areas the valuations aren't necessarily dropping, but you are seeing less sellers. So can you talk a little bit more to that? Like, how difficult is it to find a seller to match up with a buyer? Maybe per industry, if you want to think about it that way, like what are some challenges you face there?
Yeah, I think the biggest gap is in terms of valuation, right? So, so making sure, it depends on the type of business and the location, right? If you're closer to a metro area, your buyer pool by definition is going to be larger. Other considerations there in terms of matching it up. In general, you can find lots of buyers for a quality business that has good cash flows, right? Now, the price those buyers are willing to pay is a different consideration, so you have to explain the value and things like that. But the world's not lacking for internet platforms to source buyers from, right? It's just finding buyers that have their financing buttoned up. Most buyers start the sale process without having any financing in place, right? And buyers drop out or get weeded out as they dig at the buyer's financing.
And so when finding that seller, the buyer, it sounds like that's typically, I mean, obviously that's where you guys come into play, but there's a lot of websites out there and things like that you would typically suggest people turn to.
I have a profile, for myself as a broker, a firm, we're on 6 different business for sale websites. Every business goes on 6 different business for sale websites at the same time. Heavily promoted on social, right? Through the Seattle Chamber of Commerce, the Washington Society of CPAs, the FPA, like a lot of different groups, right? And people find out about the business that way. And then we have a buyer list, right? We have a couple thousand people on that buyer list. And that's buyers that said, hey, I'm an individual, I want to buy a business because I'm bored at Microsoft, right? That could be competitors, right? It's also private equity firms. So there's all sorts of people on the buyer list.
So having that relationship with somebody who has the kind of the Rolodex, but also the ability to push that out through social and marketing channels.
Yeah, of course, you want to draw in competition for your business. So because of that, we have a pretty, we're constantly building a buyer list.
Okay. And how are you, so last question on this phase of this transaction, how are you typically seeing these things financed, or is it all across the board? Is there a general rule of thumb that you start at in terms of how the actual business is purchased, or does it totally depend on?
It depends on the type of buyer. So 3 buckets of buyers. Bucket 1 would be your individual buyer that's looking to effectively buy a job. Often they're ex-corporate America. They might be 52 years old, know that they need to do something else before retirement. They're not quite at retirement age. That's the first bucket. Second bucket would be a competitor, like an existing company in this space that's looking to do a strategic add-on, or it could be a private equity firm that's looking to do a roll-up in that space, perhaps wants to buy plumbing and HVAC businesses. The third type of buyer is purely a financial buyer. And when I talk to an analyst from purely a financial buyer, they almost don't care what the business does. They have a model, right? They have a cash flow model. And when I talk to an analyst from that, they are literally plugging in numbers, right? They're plugging in cash flow numbers. And that analyst might ask me at the end of the call, oh, by the way, where is this business at in Seattle? What does that business do? And I find those calls a little unnerving. And I'm used to them, but for a seller, I know it would irk a lot of my sellers, right? If they heard some of the conversations I had with buyers about their business from that third bucket right there.
It's all financial engineering.
Exactly, right? And so the conversation and the considerations of each of those 3 buckets is quite different, right? With the first, you're selling a story and the growth levers. With the second, it's the strategic opportunity. And the third is a pure math conversation.
And I imagine, maybe I'm oversimplifying, but I imagine maybe more cash on the individual side of it, more financing as you go on to the financial engineering.
And typically that individual would use an SBA insured loan, right? Some sort of commercial financing if there's real estate, right? That might be tack on to the SBA loan, right? In the middle bucket, I've also seen individuals buy businesses with HELOC loans. And there's a lot of people in Seattle who are sitting on a couple $1 million in home appreciation on a property, and so it's not uncommon right now with rates where they're at for people to tap into home equity to buy a business. That happens. Same thing for competitors, right? A lot of them own real estate and things like that they can take loans against.
Okay. So third is after the sale. You've touched briefly on, a lot of times owners will stick around in kind of a contracting role. What are some other considerations after? What are some things that maybe sellers are not thinking about after all this time building, maybe a lifetime business or whatever?
I think, have something that you're excited to be running towards, right? As opposed to something that you're running away from. So instead of just being tired of the business or burnt out from employee issues and things like that, something that you're excited about. I had a seller who went to a monastery in Greece. He was passionate about his faith. And he literally went and spent a month in a monastery in Greece. And so he was really excited about that because he worked 60 hours a week and he never had the time to go and do something like that. So that's somebody who had a plan for what was going to happen after. For those that are working 60 hours a week and in their truck all over in the streets of Seattle, and then they go to sell the business, that's the type of seller that they may be pretty emotionally, it's emotionally jarring, right, when they sell their business. And so I'd say have something you're excited about, be it a big family trip or some sort of personal goal you're looking to accomplish. So that's one thing that happens after the sale. Another is the tax considerations there. And so just being prepared for that and understanding what that looks like. A lot of times if a business sells in February, you may not have to pay tax on that sale until a year later. So making sure you're prepped for that. And then finally, having the right advisors, right? So having the right financial advisor, wealth planner, things like that, right? So you can contribute or fund your next chapter in life.
Yeah, that first piece of advice I think is huge, by the way. That's something we run into all the time. People transition into retirement, work their whole life to build a business or work, for a business, whatever it is. And it sounds exciting until about a year goes by and you're still sitting on the couch watching TV, right?
Yeah.
And honestly, that's who we typically see as health challenges later on and some of those things too.
Absolutely.
That's a really good point. Second piece was the taxes. So
yes.
I want to I know you're not an accountant. Oh, actually you are. I'm sorry, right? CPA as well. Okay.
I do have my CPA license.
Thank you.
I am not a tax expert.
Okay, that's fair. So I won't ask you the detailed version of this. But here in Washington State, we now have a capital gains tax as well. So again, I don't need the detailed version, but can you maybe share how that's impacting your view on things?
Excellent question. I'm very glad you asked. So on that one, first thing I'd say on the Washington capital gains tax, if your business is $10 million or less in revenue, there's a small business exemption, right, in Washington State. So if your business, like my trucking business that I represent right now, $9.5 million in revenue, when we sell that business, in the next 6 months, there will be zero Washington State capital gains tax on the sale for that owner. Okay, so that's the first thing to keep in mind. The tax does apply on businesses with revenue over that $10 million number. So that's the first thing to keep in mind. The rate is 7%, right? 7% of the gain, right? And this, here's where the nuance starts to come in with the tax expert, and that the sale price isn't necessarily the gain, right? And then if anyone here has transacted or bought a business, you know that there are 7 different categories, 7 different tax categories for a business sale, right? One of those could be goodwill, another could be accounts receivable, another is inventory, intangibles, etc., right? And some of those are taxed at a capital gains rate, and some of those are not. They're taxed at at the owner's personal tax rate, right? And so it depends on which of those factors we're talking about and what your gain or what your basis in the business is.
And are you seeing that typically some of the businesses that you're working with have larger gains? I imagine at that size, there's probably a lot of gains typically in those.
They typically are, right? Typically are. And the other thing is because a lot of those owners have started their business some time ago, right? Like it's not uncommon. I've got one right now. He started his business in the 80s. So it started 40 years ago. So the gain is, the basis in starting the business is tiny relative to what the business is worth today. So yes, most of it is a gain.
That's why, especially your comment earlier about not spending on marketing and just I think generally small businesses, it's you find somebody that's done really well, built something really successful, and there's just not a lot of things that add to the basis, right?
Yes, exactly.
So, and the third thing, actually, when we were offline, you were kind of sharing a little bit about this too. But I think you had mentioned a story about, basically you've seen situations where people sit on cash afterwards. It's great that they've figured out this plan, but that you run into that challenge a little bit. Can you kind of speak to that a little bit as well?
Sure. Can you say that again?
Yeah. So the third part was basically when you do transact, having a plan for your financials after as well, having something that investment strategy, whatever it is.
Yeah, right? Sure. So knowing what you're going to do with the money, right, I think is of course important, and also making sure that you're getting good advice, right? Just like I've helped guide you through the sale, right? And then at that point, right, you probably don't want to be making investment decisions based off of advertisements and things like that. And then just being slow to make financial decisions, right? I think is prudent in general, right? And everybody wants to enjoy life, but just being mindful about the actions you're taking, particularly to make sure you've addressed the tax considerations before moving forward.
Yeah, that's really good. I mean, similar to that first point, a lot of people that we've seen in this, they've had their assets in their business for 30 years potentially.
Yep.
And so now that it's gone from your business to your bank account, it's a very different story. So
Yep.
I think that's an important aspect of it.
Yep.
Anything else as we start to wrap up? Anything else that you think would be helpful for the audience just to kind of share if they're...
I think for every business owner, I think just important to remember there are always things you can do to improve your business, irrespective of what's going on in the economy. So I challenge every owner to take that mindset. Right. Second thing is the importance of clean financials and good housekeeping. Right. It's kind of like taking a home. If we're taking your home to market, right, we would probably paint and tidy up. That's the equivalent in a business sale is clean financials and good record keeping. So just starting there with very foundational practice.
Back to the basics.
Yes.
Perfect.
Yes,
Yep,
exactly.
that's great. This has been super helpful. I appreciate you
Yeah.
taking some time to chat today.
Yeah, of course. Thank you.
Yeah, and if anybody does want to get in touch with you or has questions for you specifically, is there a good way to get in contact?
Yes, of course. So you can simply Google Washington Business Brokers. Our website is wabusinessbrokers.com.
Awesome. Well, thanks so much, Ryan, for joining us.
All right. Thank you.
Yeah.
Thank you.
Yeah. And thank you guys all for joining in. Of course, if you have any questions for us more generally, you can reach out to us, info@mainsailfg.com.